Welcome to VTS and another Member Questions episode. So we've got one here that I think is quite timely in this rather bizarre market environment in 2017. Do you think the next move for the VTS tactical volatility strategy would more likely direct us to VXX or XIV? Thanks for the great question. So short answer, probably the XIV, but let me get into the reasons why. So starting with the short answer first, and of course this would just be a wild guess because nobody has a crystal ball that functions very well. Market predictions are certainly not my style, but I would say it's more likely that it's the XIV. It actually takes quite a bit to get us into the VXX. And considering how resilient these markets have been to any kind of correction along the way, I would say the odds-on favorite are just for smaller pullbacks and XIV positions wherever we can fit them into our risk tolerance. A big drop will come at some point. And to be honest, I welcome a correction, so a part of me is hoping that our next position is in the VXX. But what we want and what we get are sometimes different, so we'll just have to wait and see. But the reason I want to talk about this question now is because I'm definitely noticing an increased number of people who feel like they want to get into the VXX now in anticipation of the next market correction. So I think now is as good a time as any to remind people that VXX positions need to be navigated very carefully. Here's a chart of the VXX performance going back to its live launch date on January 30th, 2009. This isn't a backtest, these are live numbers, and they're adjusted for all the splits along the way. So yes, you're seeing that correctly. On a split-adjusted basis, the VXX has dropped from over 100,000 to under 36. Like I said, we need to be very careful when we hold a product that is down 99.97% since inception. Now, however diabolical this looks, you can see in the chart there were a few brief periods of good performance. It did well during the flash crash in 2010, the European debt crisis in 2011, and although you can't see it in the chart, it performed well in late 2014 and 2015 as well. But obviously those brief stints of success are overshadowed by its natural desire to go to zero. The only reason it hasn't is because whenever it dips really low, they just do a reverse split and it keeps going. But in my opinion, the only way to successfully navigate this product is to wait for the markets to significantly deteriorate before entering the position. While this doesn't guarantee success, it certainly gives us a much higher probability to profit handsomely when the markets do go into a tailspin. Think of our VXX positions as insurance against major market corrections, and of course full-on recessions. We don't get that many VXX signals, but when we do, it's a good opportunity to profit from increasing volatility. Here's the results of just the VXX portion of our tactical strategy. You can see there usually is some give back when markets bounce off the lows. This is to be expected, but on a return per unit of risk measure, this is exactly what the portion of the strategy is designed to do. This equates to a 6.1% annualized return on just 2% of trading days. That's a very worthwhile win ratio. This is a breakdown of all the trade frequency for both sides of our strategy. You can see to the far right in gray, actually the largest allocation does go to our cash positions. I'm a conservative investor by nature, and I manage a diversified portfolio focusing on people's entire net worth, not just small portions of it. And because I like to reduce drawdowns, I much prefer to focus on just the more predictable times in the market. So long term, we've spent 57% of trading days in cash. Basically, the volatility market has a fair amount of what I would call low-hanging fruit. We can eliminate so much of the whipsaw action and smooth out those gut-wrenching drawdowns if we stay disciplined and are willing to hold cash when the signals aren't crystal clear. Roughly 41% of the time, we have been profiting from our XIV positions. And again, on a return per unit of risk measure, those XIV positions are quite profitable. And finally, long-term, we've only been allocated to VXX just over 2% of the time. In those same years I mentioned that saw significant market declines, 2011, 2014, 2015. We took some VXX trades and they all worked out great. But long-term, the VXX is down 99.9%, so we can't use it as a product to front-run any of our personal market predictions. We will only get into the VXX when the markets have already tipped their hand. The VXX is not to be played with, or day traded, or held for significant amounts of time. It's best used sparingly and strategically because it is designed to profit from extended market declines. Small little pullbacks here and there are not going to work because just as you're getting into the product, the markets are already ready to bounce. I don't make any forward predictions, but I'm very confident it will do its job during the next recession. I know, right? What recession? Isn't it obvious the markets are just going to go up forever? Well, someday it'll happen. Someday, maybe next month, maybe 2 years from now. But someday, just when everybody thinks the markets are going to bounce, it's going to go down further. And then further. Obviously, computer trading is dominating these markets, and right now it seems like all the algorithms are just set on buy the dip. But our VXX portion of the strategy is there to be profitable when that's no longer the case. That 2% VXX allocation could easily become double digits when the markets do finally go off the rails. And when it happens, we'll certainly be ready, but we're not going to front run it. Thanks for watching. So go ahead and click the link right here, sign up for the VTS newsletter, and when you do, you're going to get full access to all of my trading strategies for a full month absolutely free. And if you are new here, please consider subscribing to my channel. Also, if you have any questions or comments, I'd love to hear from you. So go ahead and leave those in the comment section below. See you next time.